Hello and welcome to this week's edition of FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is Friday, October 26, 2012. We had a fairly exciting week, some action. First off, though, I wanted to take a look at a couple of things here that kind of influence currency markets a little. One of them is oil. Now, oil, for the most part, is exchanged in dollars. So it has quite the effect on dollars as well as anything else that is traded in crude oil to purchase dollars. So it could be euros, it could be Australian dollars, it could be anything. So looking at oil here, we've fallen off a couple of times here over the last couple of months. And if we look at the bigger picture, we can see how we're trading in a range here for really the last couple of years almost, a little bit more than 2 years. We're in the same spot now as we were back in March of 2010, same pricing. And we've bounced a little higher, come a little lower, a couple of times. If we go a little further out to the monthlies, we can see how when we spiked way up here to $147 a barrel and then sold off quite vigorously down to $33 a barrel. We made our way back up to around 110, and now for the last couple of years we've been bouncing in this area. Technically, we've tried to make new highs and we have failed a couple of times now. So the real point here is that if we drop below about 74 and we close decisively below 74 on a monthly basis, that would push oil down further to more of an equilibrium level, which is around $37 to $45 a barrel. So somewhere down into here is where we should actually be trading from a historical standpoint. Now, I make mention of this because oil is used globally. It's used for just about everything, and it has a profound effect on the economy, the world economy. So if oil were to drop back below $74 a barrel, it would technically then sell off and we could get back down into the upper 30s, lower 40s. That would put a huge influx of capital into the global economy, and we would essentially globally, as well as individual countries, would see a big burst in their GDP. And consequently, the dollar would also rise quite vigorously, because as oil drops in price, the value of the dollar goes up. So there's a little bit of an inverse relationship here between the dollar and oil, and I wanted to bring that to light now because it really looks like that's probably what's going to happen sometime over the next 12 months. Technically and fundamentally too, there's a lot of reasons for it. So that being said, let's take a look at the currencies, and we can look first off at the euro against the dollar, and we can see here that we've been bouncing in a range here for a few weeks now. Right now we're at 129.32. We'll close probably around that, down about 3 pips on the day. This will be the 4th day down, and looks like we'll probably turn around in this area and go back up. Now technically, if we look further out here on the weeklies, we had this huge run up here, and now we've consolidated and we've built this kind of almost upward moving triangle. So what should happen is we should rally up out of that. Stochastics so showing us that we're really overbought at this point. So it's very possible we could sell back off to around 127 and then move back up. Now on the monthlies, this is where things get a little sticky. We're bouncing right up along this trend line, and we have been for the last couple of months. And we're going to close out the month this next week, next Thursday. So we'll see how we close out the month. But we would need to really close the month of October out at 135 or higher in order to have this market go higher to about 145. We're still within the longer term channel, and this big channel here is still pointed downward. So Longer term, this long-term trend is still down, and in the minor swing here, we're still down within this channel, and this channel will probably win out before the larger channel does. But overall, technically it looks like we could bounce up. Stochastics look strong, and it really depends though how we close next Thursday and close the month out. So we'll be watching that and talk about that next week. British pound against the dollar had a couple of very strong days up this week. Wednesday and Thursday rallied up over 200 points in the 2 days, and today we're down about 20 pips, so really not a lot of excitement there, and certainly not a lot of giving back. So it looks like we're probably going to bounce a little higher here as well. You can see it here in the stochastics. There's some pretty good strength there. On the weeklies, well, we were down 4 weeks in a row, so to have 1 week up is certainly healthy, and really looks like we'll probably rally back up to around 165 if we can get above these highs. We're going to need to do it next week. If we can't do it next week, then it'll probably fail. Same on the monthlies here. We can see we've had 2 months up in a row, and now this month we're still down for the month. We really need to rally and close above last month's highs, which are also above the highs from about 6-7 months ago. So we need to get above those numbers there, which is really about let's see here. It's really about 163, 163.20 area. We would need to close decisively above that on a monthly basis in order to drive this market higher. U.S. dollar against the Swiss franc, we are up a little bit today, up 1 pip right now, depending on your quote service. We've been up for 4 days, most of the week, and showing a little bit of strength, but it looks like we'll probably fall apart with that strength early next week. And on a weekly basis, we're in a pretty good consolidation here. And if the last consolidation, which is back here, is any indication of what this consolidation will be, well, we got probably another couple of months here before it plays itself out. And we look here on the monthlies, we can see that as well. Back here in that same consolidation on the weekly, we can see it on the monthly, and we consolidated in the same area there for a good solid 2 months before we started to move up. So we got a couple of months here before we can start to move up. So around the first of the year, we should see some movement back to the upside here, and probably breaking this downward trend line at that point. U.S. dollar against the Japanese yen had a great week this week. Rallied up quite a bit, and now today we're giving back pretty much all we gained for the last 4 days. So down 61 pips, back down below 80, and looking like we'll probably correct a little bit before we move on up. But overall, still looks fairly positive. The way we're closing this week out is not really good with this tail to the upside. That's kind of a failure here. We broke out above this trend line last week, and now with this tail spiking up like that, that's not exactly a positive sign. Of course, on Monday, the Bank of Japan meets, and there's a lot of pressure on them to do some more quantitative easing. So it depends on how much they do and whether they do it or not. Will have a big determination on the yen. So on the monthlies, it looks still very positive. We came down, we tested the lows that were down here, and now we're starting to break up higher. We need to close up above these highs from several months ago, back up around about 80-63 area. So we need to close decisively above that before we can make the longer term move higher. Euro Swiss up just slightly today, and had very little movement during the week. Looks like we're prone now to this range instead of the 120.10. We're now around the 121 area, and looking like we'll probably stick around that for a while. Euro against the yen, consolidation week, pretty much ending in the same area we started the week, and showing today down about 80 pips. So really longer term, if we look at this, it's still very weak. This week is ending up to be a negative week. We could still bounce up next week or the week after to that 105 area and still be well within the longer term downward move here. If we look at the monthlies, well, we can see how This will be the third month up now. We close out this month, but we would need to close decisively above last month's highs to really push this market higher. And really, in all honesty, we get up to about 107.50, 108. That would be about it. This market is very, very weak longer term, and really don't see it going anywhere. We failed the last time we rallied up to hit this trend line, which was at that time about 112, 113, and has since come down. We're now about 108, 109. We probably will not get there, just like the last time. Market is very, very weak. So if we did get up there, it'd be a great selling opportunity, and we'd probably look to really get in there on the short side, because ultimately it looks like it's going to the upper 80s, lower 90s area. So that is it for the week. Hope you are a member of FX Addicts. If not, please stop by. We are around all the time and would love to talk to you. Thanks. Talk to you later.